Let's go across to Ajay Mitra as well. He's Managing Director of India and Middle East at the World Gold Council. And let's get to know on how the demand for the first quarter has been and the view, of course, going forward. Mr. Mitra, hi, welcome to the show. The demand numbers are weak for India, whether it comes to jewellery, investment, consumption for the first quarter. How do you read this and what do you think are the reasons for this decline?
I think the first quarter demand numbers has been on the softer side. So while in value terms we've had a decline of about 3%, but in physical terms the decline has been 29%. I think some of the factors that's contributed to softening of demand has really been around the trade destocking inventory because of the way the customs duty has been administered starting this year. As you recall, up until last year we had a fixed rate of duty. It has now changed to ad valorem, which has resulted in many of the importers being exposed to uncertainty on the price front and therefore have reduced their inventory holdings.
So Mr. Mitra, while the first quarter has been on the weaker side, how do you look at the coming couple of quarters when it comes to India demand now?
I think we are going to be facing some challenging situations over the next couple of quarters up until Diwali. We do have high inflation, and when you look at what the consumers have responded to in the survey which was done by RBI very recently, inflation was high on their agenda. So there is an inflation that's looming around the corner. There are strong indications that subsidies around petroleum products and other daily essential commodities are going to be withdrawn, so prices are going to move up. So given that to be the mood at this point in time, there is going to be belt tightening by consumers, which would really lead to shrinkage of disposable income, and therefore at least in the urban centers we see a shrinkage in demand overall till maybe Diwali kicks in.
Mr. Mitra, how have you seen the shift to the gold ETFs? Because while the other numbers do look bleak, the ETF numbers on the other side have been slightly positive.
I think when we look at, it's a very good question, when we look at the first quarter AUM under gold ETFs, I think we've seen over 120% increase in AUM. And I think what's even more heartening is the fact that portfolios have gone up by a 50% increase over the same period last year. So for example, there are 150,000 new customers that's come in to the ETF sector, which is very heartening, and it continues to indicate that investments made in gold is robust, is sound, and is attracting new investors from the equity market and from the other assets which haven't really performed.